Lots of big global news to unpack. Kyle Rodder joins me now from capital.com. Kyle, good morning. So big news globally overnight. How have markets reacted to the announcement that Prime Minister of Canada, Justin Trudeau, is resigning?
Yeah, well, we saw the news break, or at least the rumours sort of reported in Asian trade yesterday. And after a sort of a little bit of chop, we saw a fairly immediate move in the loonie and a pretty stark appreciation in the Canadian dollar, which, I mean, really you can infer from that everything that you need to know, which is to say that the markets are basically happy that, Trudeau will be moving on. And there's probably largely two reasons for this. One, it's the sort of general economic malaise and the belief that Trudeau is a not very pro-business leader and hasn't prioritised business and the economy as highly as perhaps some other key policy issues. The other element here is that if you're looking to the potential candidates to replace Trudeau, amongst them is Mark Carney, who is, of course, the former Bank of Canada head, the Bank of England head, and someone that the markets feel much more confident in terms of economic management. The flip side of this too is that clearly the Liberals in Canada are sort of on the ropes, so to speak, politically, and very, very likely, at least if you look at sort of betting markets and polls, to lose the next election. And if that happens to be the case, you get an opposition in terms of the Conservatives that are, again, touting their pro-business credentials, and on top of that, too, running policies that will sort of unwind perhaps some of the policies of the Trudeau years that were seen as perhaps weighing on the economy, certainly leading to some of these sort of weaker economic conditions, which obviously the government is not entirely responsible for. There's the monetary policy element, as well as some of the issues with oil prices and what have you. But to sort of distill it all, the Canadian dollar really rallied on the belief that Trudeau moving on is going to be better for the Canadian economy. So it was one of the kind of key developments last night, a bit of an end of an era, maybe sort of a signal of the sort of ideological shift that's happening across the globe as well. But sort of all in all, if you look at it from just an economic perspective and market perceptions, it's sort of considered a largely positive thing.
And some people are saying that this move leaves the Canadian economy vulnerable to Trump's tariffs. What do you think?
Well, I mean, if you look just on the basis of the price action, clearly the markets don't think that is an increased risk from Trudeau's departure. I mean, it probably has to be said that Trudeau and Trump are hardly ideological bedfellows. There is still the ever-present risk of tariffs on Canada. There was obviously talks last night, just more broadly speaking, of this kind of universal tariff being applied on by the US on its trading partners, including Canada, and on top of that too, effectively that the trade tensions that would exist under the US-Canada relationship will persist no matter who's in charge. There is perhaps the hope, again, that we see the opposition rise to power, that there might be a better relationship between the United States and Canada, one that might see some level of watering down of potential tariffs and stronger trading relations that would, by extension, sort of benefit Canada's economy. So I don't think actually Trudeau's stepping down actually makes the situation any worse. If anything, on the margins, and this is not necessarily guaranteed, so if it's not sort of a net neutral, it actually might be a net benefit. So again, I think that's all being sort of expressed in some of the price action last night, and the fact that we did see that big move in the Canadian dollar. There's a lot of sort of water to go under the bridge now, again, to see who replaces Trudeau and whether the Liberals are able to win government once again. But should everything go the way that the markets want, they'll have a much more sort of pro-business leader, and a leader that may have a better relationship with Donald Trump.
And we did see the US dollar fall following those reports about Trump's tariffs. However, it seems to have reversed some of those declines.
Yeah, so there was an interesting report out overnight, effectively first suggesting that, Trump's tariffs might be sort of watered down and be a little bit more sort of specific and targeted. Trump came out fairly quickly to sort of quash that, and there was this kind of rebound in the US dollar as a result. Effectively, there is this kind of perennial discussion and unanswered question about whether the tariffs and certainly the kind of proposed tariffs in terms of their size and breadth are simply a negotiating tactic or something that Trump wants to follow through with. We didn't get any kind of additional information as to whether it is the former or the latter, really on the basis that, clearly if Trump wants to maintain the tariffs as a strategic sort of tool, that maintaining this kind of level of bombacity and this kind of strategic ambiguity about how they will be applied certainly serves his interests. So to continue to talk up the threat of tariffs, simultaneously provides the opportunity of potentially applying them in full if you take Trump at his word and kind of implementing those sort of broad-based and quite significant tariffs. But they also provide that additional leverage and, again, that strategic ambiguity to continue to kind of perhaps help Trump achieve his sort of political and diplomatic ends as he takes power. So nevertheless, aside from the loonie, the dollar sort of appreciated once again and kind of climbed back towards those 2-year highs. And there is just that ever-present fear and uncertainty about how significant these tariffs will be and what the actual intention of the Trump administration will be in terms of administering them.
And we did get some US and German data out overnight. Have you had a chance to look at that, and what's expected to come out today?
Yeah, I mean, we sort of had some final PMIs coming through. We had sort of some composite data out of the United States. I mean, it kind of told us what we already knew about both regions, which is, Europe's basically very, very sluggish in a state of malaise. The US composite data was a little bit lower than a month prior, but I mean, we're still looking at an economy that's expanding fairly strongly. Over the next few days, we start to really turn our focus towards some of the labour prints that we'll get out of the States now. First, obviously, being the sort of JOLTS job openings, which will be really significant to kind of get a gauge on the tightness in the labour market and, effectively labour demand going forward. And then we sort of move into the FOMC minutes and those non-farm payrolls, which will be sort of crucial both to give us a sense of, what the balance of risks are to the US economy as we start the new year, especially considering that there's now this perception that the growth story remains fairly robust and hiring remains fairly resilient. And then there's, of course, too, trying to frame how the FOMC is seeing this and to what extent there are sort of divergent views within the FOMC about, again, the reaction function, the balance of risks, and as a result, how policy rates will move going into the start of this year, and effectively how long the pause will be now from the Fed, and when that next rate cut might be expected to come through, if, of course, at all. So, it really starts to become a much more interesting story when it comes to the markets now after a couple of, fairly quiet weeks on the data front. And again, it all ties back to just effectively, what's driving the US economy, where policymakers will be looking in terms of their priorities and how that will affect valuations.
And markets will be shut on Thursday for a national day of mourning to mark the death of former President Jimmy Carter. Do you expect trade to ramp up in the next few days before then?
Well, yeah, we'll probably see a little bit of nervousness and probably lower trading activity going into the event, because effectively what will happen is that, we'll have thinner market trading conditions. We'll have some data potentially that's going to come out on that day as well. The markets won't be able to sort of price in immediately. And then on the back end of that, we'll have, the non-farm payrolls data, which, typically markets sort of traders, investors sort of sit to the sidelines prior to the event. Of course, we might get some sort of new information or some new developments, some tweets out from, or, truths, or whatever we call them, from Donald Trump, which may inspire some activity. And we do have, some data coming out of, China and obviously domestically too here that might sort of drive price action at the margins. But that kind of disrupted trade will kind of mark a little bit of nervousness for market participants, more likely sort of drive them to the sidelines and perhaps, at a time where trading conditions are already going to be thin because of the time of the year, maybe compound that dynamic a little bit as, sort of investors sort of wait and see for what comes out of some of these key releases and then respond to them once we actually get them, chiefly, of course, the non-farm payrolls at the end of the week.